Opendoor has once again given investors plenty to think about. After Wednesday's steep sell-off, which left the stock down more than 11% at $3.22, Thursday saw a strong reversal. By the close of trade, Opendoor had gained 38 cents, finishing at $3.60 per share, up nearly 12%. And in after-hours trading, the stock held steady, adding a single cent, which in context feels more like confirmation of stability than anything else. That rebound matters. It shows there's conviction in the market, and it came on a day when the broader indices were sluggish and in some cases slightly down as Wall Street waits for Jerome Powell's speech at the Jackson Hole Symposium. For Opendoor to post an almost 12% gain in that environment isn't just technical noise. It's a sign of retail resilience, of narrative strength, and of a company that is increasingly defining its story day by day. One of the most important developments that shaped sentiment on Thursday didn't even come from the trading floor. It came from the acting CEO, Shrisha Radhakrishna, who posted a candid and detailed message on X. In that post, he directly addressed the Opendoor community, the so-called $Open fam, praising their energy and acknowledging the thousands of tweets and suggestions he's personally been reading. More importantly, he laid out how his perspective on artificial intelligence has fundamentally shifted over the last year. He admitted that a year ago he was skeptical, believing AI wasn't quite ready for real work with real money at stake. Now, he says he's convinced it can do far more than most realize. He pointed to concrete examples like Repair Copilot and RiskAI, tools that his team built in just days or weeks. These aren't abstract visions of AI, they're actual working products. And he underscored that Opendoor now has a small but powerful team of builders who've delivered 0-to-1 products before. The message was clear: Opendoor is evolving into an AI-driven housing platform, running lean, cutting compute costs, and at the same time strengthening their operations tooling with new apps like the Key Agent app. He emphasized that they had just finished a marathon board meeting and that management and the board are fully aligned. The focus now is scaling key connections and Cash Plus, and AI will be woven directly into that growth story. That post does two things. First, it reassures investors that despite the leadership shakeup, there is unity and strategy at the top of Opendoor. The interim CEO isn't just filling space, he's actively steering the company toward innovation. Second, it validates retail investors. By directly addressing them, acknowledging their contributions, and even calling their ideas gems, Shrisha is cementing Opendoor's reputation as a company willing to embrace its retail base. In a world where retail investors often feel ignored, this is a dramatic contrast. That's why the aftermarket stability matters. When you have a CEO speaking the language of retail while presenting a credible technology narrative, it reinforces conviction even after volatile swings. Investors are starting to see that this isn't just a housing stock, it's a housing plus AI story, and that adds another layer of potential. At the same time, the retail hive mind narrative keeps expanding. Anthony Pompliano has been encouraging shareholders to send him product and business ideas that he'll compile and submit to Opendoor's board. This is retail governance in action, a decentralized hedge fund model where thousands of small voices combine into something more powerful. We've seen examples of this pressure already influencing leadership transitions, and now we're seeing it shape strategic conversations about product and growth. And then there's Eric Jackson. He has continued to amplify Opendoor's story on X with his bold stunts, including spending 2 days outside Drake's mansion in Toronto trying to draw the superstar rapper's attention to the stock. Whether Drake actually buys shares is beside the point. The stunt keeps Opendoor in the headlines, reinforces the narrative energy, and keeps retail investors engaged. This is a game where perception matters, and Jackson is making sure Opendoor is perceived as a cultural moment as much as it is a stock. But Jackson's role goes deeper than just theatrics. We've learned that he has also been in conversations with Korean institutional investors about the possibility of a significant Opendoor investment. That's a major development if it gains traction. Up to now, the Opendoor story has been dominated by retail chatter, but if institutional capital starts flowing in, particularly from international players who see long-term opportunity in the US housing technology sector, that could change the dynamic entirely. Suddenly, this isn't just a retail movement anymore. It's a story with cross-border institutional credibility. The potential convergence of retail enthusiasm and institutional validation is powerful. Retail provides the momentum, the energy, and the social media amplification. Institutions provide the deep capital and long-term stability. If Opendoor can truly capture both, then today's volatility might eventually give way to something far more durable. Now, overlay all of this with the macro environment. Jackson Hole is front and center this week. Jerome Powell's speech will be scrutinized for any hints about the timing of rate cuts. Markets currently expect September to be the earliest realistic window for a cut. For Opendoor, this matters immensely. Lower borrowing costs would mean cheaper mortgages, more housing turnover, and a more favorable backdrop for its asset-light model. The macro and the micro are aligning. If Powell opens the door to cuts, Opendoor could ride both a narrative wave and a fundamental tailwind. So what should investors be watching as we head into Friday? First, technical levels. Thursday's close at 360 was encouraging, but the next real test is whether the stock can reclaim and hold above 370 or even $4. For has proven to be a psychological ceiling in recent sessions. Breaking it decisively would send a strong signal. On the downside, support around 350 is critical. A break below that would open the door to another retest of 320, but the resilience shown on Thursday suggests buyers are prepared to defend those levels. Second, the AI narrative. Expect more investors to dig into Opendoor's blog post on its AI journey and ask how products like Repair Copilot and RiskAI could scale. If the company can continue to demonstrate practical AI tools that save money and improve operations, the story broadens beyond housing and becomes a tech narrative. And that could attract an entirely new class of investors who might never have looked at a housing stock before. Third, the retail institutional bridge. Jackson's outreach to Korean investors could be a glimpse into the next phase of the story. If even a fraction of those conversations translate into real capital, it validates the long-term bullish cases being made by Eric Jackson and others. It would also ease concerns that Opendoor is too reliant on retail hype. Fourth, the Jackson Hole outcome. If Powell signals dovishness, we could see a risk-on move that benefits speculative growth names like Opendoor. If he's hawkish, expect turbulence, but keep in mind that the Opendoor community has proven resilient even against tough backdrops. So as we wake up to Friday's pre-market, the setup for Opendoor is fascinating. You've got a company that just demonstrated it can claw back after a sharp drop, an interim CEO articulating a clear and innovative vision with AI at the center, retail voices shaping the narrative through stunts and governance initiatives, and the potential for institutional investment from abroad. Layer on the macro uncertainty of Jackson Hole, and you've got the recipe for another volatile but potentially transformative session. The key takeaway is this: Opendoor is no longer just a stock drifting with the housing cycle. It's becoming a cultural and strategic story that blends housing, technology, retail energy, and now even institutional interest. That combination makes it one of the most compelling and unpredictable names on the market right now. For investors, the question isn't just whether the stock goes up or down on Friday. The real question is whether Opendoor is carving out a new identity, one where AI, retail engagement, and cross-border capital converge to create something larger than the sum of its parts. Thursday's rebound suggests the market is starting to take that possibility seriously. And with Powell's words about to hit the tape, the stage is set for Friday to be another pivotal day in the Opendoor saga.